Good afternoon, ladies and gentlemen. This is Young Money Investing. My name is Liam, and welcome back to my weekly technical analysis. We're going to get into it in just a second. We're going to look at some small cap stocks, some large cap stocks, and of course, I'll get you guys into my trade of the week. Really quickly, though, if you guys appreciate the channel, please take a minute, go subscribe. It's easy. It takes like 10 seconds. All you have to do is click your mouse. So go do that. Now that that's all settled, let's go ahead and jump into the charts. So we are starting off here looking at the daily time frame for the Russell 2000. You can see last week we had this move up. We came into our purple line here. That's our 20 bar moving average. And we kind of rejected that pretty hard, came back down almost to, where we started the week. If you did watch my technical analysis last week, that's pretty much exactly what I anticipated happening, although I think that I specifically mentioned it with the Nasdaq, kind of more of like a midterm swing trade to possibly take this back up to our 200 moving average and see if we can retest that, or one of our other moving averages as well. But I was kind of looking for the markets to hit some trouble with the moving averages. I thought we would maybe come up to the 200, which is this pink one, but it was a 20. We rejected that pretty hard. So always nice to see your ideas play out here. The other thing I mentioned was if we broke this 1731 level, you could take this back up. So if you did do that, if you did catch this trade, the high on this candle here was about 50 points higher. So that would have been a very, very nice little trade if you're trading futures the way that I do. So congratulations to anybody that took that. If you didn't, don't worry. There's plenty more opportunities out there. There's always opportunities. Sometimes you just have to be, a little patient and let the opportunities come to you. Moving on, let's take a look at the Nasdaq. Pretty much the same story here. You can see we opened up here coming off the bottom of our trend line, came up to our 20 bar moving average, and then got smacked back down and had a pretty strong close here to end the week on Friday. At this point in time, looking at this structure on the Nasdaq, if we get a close below the wick on this candle, and the low here is 890, if we get a close on the daily time frame below 890, I would look at that as a very strong short opportunity. Given the structure that we kind of have in place here, and I'll zoom out to the weekly time frame so you can see a little better. We do have this descending triangle. Descending triangles typically break to the downside. You can see that the kind of last gasp, of support we have here is this support line acting in confluence with our 200 weekly average here. But again, if we get that break, going back to the daily time frame, if we get that break below the wick on this candle, I would just consider that a phenomenal shorting opportunity. So keep your eyes peeled and remember to perform your own due diligence before you make any decisions. I'm going to jump into the dollar index, the DXY here. Looking completely different from the stock markets, as you can probably tell, where it's in a very strong, healthy uptrend, respecting the 20 moving average and then the 50 below that, which is this blue line, and just looking really strong, really solid. And this is actually the inverse, I want to say, of our stock markets. So when the DXY goes up, typically stock markets will go down along with other asset prices because the dollar is gaining strength against these other assets. So the other assets have to go down in terms of dollars because it requires less dollars to purchase the same amount. I hope that made sense. If it didn't, I don't know how to explain it more clearly than that. Dollar go up, assets go down. It's pretty much that simple. So I'm keeping an eye on this as well. I'd like to see the dollar continue to kind of gain some strength here, keep setting higher highs and higher lows. That's just going to help my hypothesis of more short-term pain for the markets as a whole. Now, let's get into our trade of the week, which As you can see here, the trade of the week this week is Ambac Financial Group. Ticker symbol is AMBC. So I'll kind of go into what I'm looking at. We're going to start on the monthly time frame here. You can see I have several lines drawn here. These white lines, this is our kind of wedge formation. I enjoy wedge formations, you know, especially one like this with a slight downward tilt. I think it's a really great setup. And you can see if we zoom in here, we're right at the top there. We're also right around the 50-month average here, because we are looking at the monthly time frame. That's what this blue line is. You can see it's right above the bar. Currently our blue line is at 1578. That's an important number to remember. 1578. Zooming into the weekly time frame, you can see we have our 200-week average here, which is trading at 1715. And then going to the daily time frame, that's really all we have left. It's just this trend line. So what I'm looking for is a break of our wedge. I'd like to see a break above this 200-week. The 200 weekly average is 1569. So 1569 and 1578, along with our wedge at, I don't know, call it like 1530, 1540, something like that. Several factors here acting in confluence to force the price lower. I think if we can get a break to about 16, that would put us above the trend line, above the 200-week average, and above the 50-month average. If we get above all of those, I would expect some fairly decent move to the upside here. So I have these green lines drawn. These are my take profits. This first one is at the top of a fair value gap. If you don't know what a fair value gap is, it's like a normal gap. Like you see over here, we have this tiny little gap. A fair value gap is pretty much the same thing, but you have candles that connect, so they're sequential. So it's not actually a gap. There's just a really sharp, sudden movement in a particular direction, such as right here. You can see that we dropped, we'll go to the close. We dropped about 50% in about a month. So that's kind of what a fair value gap is. It looks like this really sharp, sudden sell-off, and then there's some kind of consolidation and movement outside of that. But we never actually got back to kind of where it started, and so there is kind of a discrepancy there, and that's basically what a fair value gap is. So the top of that gap is going to be my first take profit at 2153. If you're being more conservative, you could take profit at about 20, and if you wanted to be more aggressive, your first take profit could be maybe around $23. And my second is actually another fair value gap that goes back a little further to December of 2016, set at 2630. So if we go from $16, this first take profit will take you about 35%. Second one for about 65%. So really good setup here. I think that you have some really excellent risk to reward opportunity on this stock. But remember, waiting for that break above 16 and then kind of taking it from there. That's all I got for you guys. I hope you have a fantastic week and you crush all of your trades. I hope you make an enormous amount of money, and make sure you go like, share, and subscribe. Peace out, homies.